sky is falling, Lyn, and my phone is ringing with a lot of financiers and promoters who typically call me if they want some assistance raising money or getting a story in front of new shareholders. But these days they're calling just to chat, almost like a mental health break from the chaos in their offices. And I'm hearing so many individuals, specifically in the venture finance market, talk about this is the worst they've ever seen it. And I call back, I'm like, does it feel like March of 2020 when there was this historic crash? Like, no, it's worse than that. Does it feel like 2008? It feels worse than that right now. And human beings have a tendency of catastrophizing, where we look at the near-term events and assume the absolute worst case scenario is going to happen across all boards. So what do you have to say about that sentiment, Lyn? Like, where are you seeing what's going on right now from your perspective?
Well, so in the prior few years, we saw, one of the biggest ever liquidity injections into markets in history. And now we're seeing one of the biggest withdrawals of liquidity from markets in history. And so it's unsurprising to hear that there are rather extreme anecdotes happening, because we are seeing that show up in some of the numbers. I mean, the valuations that unprofitable tech stocks reached was comparable to the dot-com bubble. And the drawdown that many of them have had since then has also been comparable to the dot-com bubble. Back during the dot-com bubble, it was not like every sector was affected equally, right? I mean, there were a lot of the value sectors. I mean, they might have run into a few years of market turbulence, but they didn't have the extreme, price movements and liquidity movements that you saw in some of the tech names. And we've kind of seen a similar outcome this time, where what you see in tech and venture is like one of the biggest boom busts ever, whereas what we're seeing in many other industries is not nearly that extreme. And I think what's also adding to it is that we have a historic bond drawdown at the same time. Whereas in most of these environments, you would have seen bonds do pretty well. And so a lot of investors have stocks and bonds, and they both went down. And so based on something like a 60-40 portfolio, you actually have a drawdown similar to what you see in 2008, even though stocks, in terms of the broad indices, have not done nearly as poorly, at least as at this time, as what they did in 2008.
Right. Now, would you qualify any of this as a black swan event? And I guess this question comes from a headline I saw yesterday, or maybe the day before. It was the CEO of Coinbase calling this crypto crash a black swan event, which to me was like a huge red flag, because I'm thinking the CEO of Coinbase, crypto crashes cyclically, right? I don't think you can qualify this as a black swan event. If the CEO of Coinbase is calling it such, it's hugely concerning to me. I'm not a shareholder of Coinbase, but just generally speaking. So are there any facets of this crash occurring now that you could honestly say were completely unexpected and would qualify as a black swan?
I mean, you can. So a black swan is pretty much by definition unpredictable, right? And so there are low probability events that occurred. Like, I mean, I think the Russia invasion in Ukraine. I mean, the idea that it would happen right now this year was surprising to many, including myself.
Yeah.
So there's a number. I mean, the timing of the pandemic, a few years ago, things like that are possible to have in your kind of near-term models. And so there have been a number of shocks to the system, but there are always shocks to the system. Some of what we're seeing in this broad drawdown are not black swan events. And so, for example, if you look at the U.S. Purchasing Managers Index, right, the PMI is basically a measure of economic growth acceleration or deceleration. And that doesn't mean growing or shrinking. It means accelerating or decelerating. And of course, if it decelerates enough, it can outright shrink. And if you look at that long-term cycle, roughly every 3 years, you go through one of these gyrations where it looks like a sine wave with like a 3-year period. And, some of those drawdowns result in recessions, other ones result in soft patches. Whenever you have a declining PMI environment, which we've had over the past, 6 to 12 months, you tend to get a lot of these impacts in the system. And then we complicate it by the fact that we had the biggest inflation spike in decades. And so the Fed is tightening into that slowdown. And so a lot of things that are inherently unstable get tested and broken. And what we're seeing in crypto, I mean, it's always hard to say what specifically is going to happen. But for example, the biggest news event there is the complete unwinding of the Terra Luna ecosystem. And there are a number of us, including myself, that actually wrote ahead of time about the risks with that protocol. And so, I didn't say I was going to crash in mid-May. It was like, it's like, if you're worried about forest fires, you can describe, the conditions for a forest fire are looking very problematic, but you can't predict when lightning is going to hit a tree, right?
Yeah.
And so there are a bunch of people that are outlining there are aspects in the broad crypto space that are completely unsustainable, and that can be separate from your long-term view of something like Bitcoin. But basically around Bitcoin, there's all these other projects, and many of them are, basically they seem like black swans when they happen, but they were artificial to begin with.
Right. Well, you brought up Russia, and it's a good one because it's so easy in hindsight to look back at an event like that and say, yeah, we saw this coming, right? If you look at the territory Russia has reclaimed over the last 7 to 8 years, you could say, well, Ukraine was kind of the next logical step. We should have seen this coming. But in reality, there's no way. And I would even say some of the smartest investors that I've had on this show, including individuals like Jamie Rogers or Rick Rule, were really bullish on Russia. And actually, on their most recent spots on my show, we're talking about Russian stocks, right? And then this event comes out of nowhere. But, I've heard you talk about this. Russia was, low debt, high or, positive real rates. And if we're in a commodity super cycle, they were positioned really effectively, right?
Yeah, Russia had a lot of strong things going for it going into this, right? Like, as you point out, they have low debt, they have high foreign exchange reserves. Basically being a commodity exporter was really good going into this environment. And obviously they have some structural issues related to demographics, related to their levels of freedom and things like that. I think they could certainly use some reforms. But overall, I mean, they were pretty well positioned. And it's funny because, Russia's had this long-term history of being invaded a number of times. And so there's a lot of people that pointed out that they have certain geographical concerns that they want to manage, but they're a nuclear power. I mean, they're at no risk of being invaded or anything like that. And so if anything, this has decreased their level of security going forward. And so I think that was surprising to a lot of people that they would take such extreme action, even though there's obviously tensions there. And so, we'll see how this shakes out. Obviously, Russia has a lot of, they have a stronger hand than I think the West realized, because of course, Europe is very heavily reliant on Russian energy, and globally, I mean, fertilizer markets and nickel and basically there's so many commodities across the board that if you just took Russian outputs out of that equation, it'd be a catastrophe. You'd have famine. And so basically they have a very strong hand. So does obviously NATO and the peers there. And so this has certainly added a lot of volatility and tension to the markets. And, for a while I've had the 1940s comparison where the 2020s were a lot like the 1940s in terms of fiscal and monetary policy, as well as social change, things like the fourth turning, wealth concentration, rising populism, there's so many things that were aligned. And I was hoping that we wouldn't see a kinetic war. I was hoping that wouldn't be one of the areas of comparison, but unfortunately that's, during those types of big changing periods, you often do see, unfortunately, that it manifests in kinetic war.